chasing the market. Sit down and let me teach you how to take sniper entries and catch every move in the market. Hello and welcome back to RALLYTOP Investing 3.0 SMC Masterclass. In this episode, I want to teach you how not to chase price in the market, such as this, or this, or this. As you can see, all of the three areas of interest hit stop losses. So you do not need to chase price in the market. I'm going to show you the way to take sniper entries and catch every move in the market, only if you stick with me till the end of this video. True SMC trading strategy is for you to understand that inducement is king. Once inducement or liquidity has been taken out, then your high and low can be confirmed. For instance, this is your inducement being taken out in the market. Once that happens, your high or low is confirmed. Now, your higher low cannot be confirmed just yet in the case of a bullish structure until price goes back up to take out this major structure high and has to close above it, and that is known as break of structure. Immediately after that break of structure, then your higher low is confirmed. So after that higher low, what you have in the market is this next high. For this next high to be confirmed, it needs inducement. Technically, this becomes your inducement in the market. And once inducement is taken out, high is confirmed. And now after taking out that inducement, price printed this low and went back higher to take out this high. But take a look at the way it took out that high. It didn't take it out with a candle closure. It took it out with a candle wick. That in itself will tell you that price is likely to make a deeper retracement or sometimes total reversal. So because it did not close above this high, this low cannot be confirmed as a valid low, and therefore this high will now have to be transferred to this point. When it grabbed inducement here, everything will be transferred from here to this point. Now this is your new inducement to confirm this high. Simple. So what you actually have in the market is that this is your range low and this is your range high. Simple. So this is your trading range. And now, as you can see, price after taking out inducement travel back down to take out this major structure low before this higher high, and that is known as chalk, change of character. So after change of character, you now have this low. For this low to be validated, it needs inducement. And where is your inducement in the market? Well, here is your inducement. As you can see, this high took out this previous high here. All right, so that's your inducement. Let me show you exactly what happened here so you can understand. From this high, price printed this low and then went back up to print this high that took out this previous candle's high. Even if it took it out with 1 pip, it's still valid, and then price came down. Now let me pull it out for you to see what is happening there. Look at it. This is your valid pullback, and so therefore this is your inducement to validate this low here. Okay, but as you can see, price did not go back up to take out that inducement before creating this new low here. And for this new low to be confirmed, inducement has to be transferred to this point. Once price takes out this inducement, then we can take decision in the market. But for now, that becomes your inducement to confirm this low. And let's see what happens. So as you can see, price took it out clearly. So this low can now be confirmed. So what do you have in the market essentially is you have this your high and you have this your low here. Now that price has closed above this inducement, if it wicked above this inducement and gives us any lower time frame reason to go short, then we would have gone short there. But in this case, it has clearly closed above this inducement. That tells you that price is likely to make a deeper retracement to go and tap into a higher time frame area of interest before we see any form of lower structures. And so where is your area of interest after taking out inducement? Well, the only area of interest you have here that is still unmitigated is this. Like I showed you before, that's a valid pullback, and therefore this becomes your area of interest. Now, if you want to refine this area of interest a little more to be smaller, then this candle wick that took out this previous candle's high would be the refinement. Simple. And therefore, after that refinement, you can go to your lower time frame to refine this area of interest so you can get the precise point that price is likely to reverse from. Now, let's get to the 1M and see whether we can refine this area of interest. So as you can see, the refinement we can have here is this, just this OB here. Okay, now, but we need a fair value gap. If you are marking out an OB, you need a fair value gap. So to have a fair value gap, you must include this other candle here, and that becomes your valid OB in the market. That's refined area of interest. So we drag it out. We drag it out. And let's get back to that 15M now. Now that we have refined that area of interest. Let's see what happens there. Okay. So this is that area of interest that we have refined to. Now, let's continue to play price and see what happens. Now, meanwhile, remember I told you that because price has now taken out this inducement with a candle closure, so price is likely to go tap into this higher time frame area of interest before we see any form of bearish move, and we can take advantage of this momentary uptrend to go and tap into this higher time frame area of interest. How do we do that? Well, how you do that is, if price is going higher, you need to wait for inducement to be taken, such as this inducement taken out, and tap on any area of interest here, and then you can go long. Again, inducement taken out, tap on any area of interest, then you can go long until you get to this higher time frame area of interest where you can now take price lower. That's how to take trades in the market. Now let's move forward. Okay, look at what is happening here. This is an inducement. Price is yet to take it out, but if price takes out this inducement, we have a valid area of interest here that we can take price from. Okay, so but we can get to the lower time frame like the 1M and refine that area of interest to get the precise point that price is likely to come react off from. So let's see where that is. Okay, everything here seems to be mitigated. Let's see this one. This is the last sell momentum, but please put your stop loss just below this place. Okay, so that's our refined area of interest. So if price in future comes into this, we want to take trade from there. So we can go back to the 15M and see what is happening there. Okay, I hope you are following what I'm doing here. So this is the 15M. So this is our refined area of interest on the 1M. Now, if price taps into this refined area of interest, we want to switch over to that 1 minute time frame again and see if we can find any entry trigger, a valid entry trigger to take price higher to this point. So let's continue to advance price. Okay, we have gone too far. Let me take price out from here. So as you can see, price came precisely into this refined area of interest. Now, when you get to your entry time frame like 1M now, you will need to find a valid entry trigger. It could be chalk, it could be TNCP, could be anything that you know that you use to confirm your higher time frame zone. So I'm going to get down to the 1M now, and let's see what happens on the 1M. Okay, so now as you can see on the 1M, we have a reason to go long from here. Now, this is a candle pattern that we often use at our academy to take trades. And we can actually go long from there with that candle pattern. Stop loss just below. And then where do you target? You target opposing area of interest here, because you're expecting that when price taps into this, price is likely to make some reactions and go down. That's the first way, this candle pattern. Okay, the second one is this chalk. Once price takes out this chalk and gives us any reason to go long, then you can add to your position. This will become your change of character in the market. Now, one more thing here. After change of character, do you actually need inducement? Yes, of course, you need inducement because price closed below this structure low here before printing this lower low. So you will need inducement if it takes out this chalk. But for this pattern here, which is called TNCP, we don't need anything. We just take our trade directly from there. So let's advance price. So as you can see, we have been tapped into the market right now. And boom, our take profit was smashed there. A nice over 5 hour trade. Okay, so this is a sniper entry. That's sniper entry number 1, how you can take sniper entries in the market. And now when price now came into this, let's play price from here so that you can understand every bit of what we're doing. Let's take out price from here. Now take a look at this. Price came into this 15-minute area of interest. So the first time price tapped into it, remember, our refined area of interest is still here. I hope you understand. But now, on this 15 minutes time frame area of interest, price tapped into it. Once price tapped into it, even though this is not a high probability point to take trade from, but you can still take advantage of it and take short moves in the market and make some good money for yourself as well. So we can get down to the 1 minute. Remember, 15 minutes is our higher time frame. So we get down to the 1 minute. Now, take a look at this. Price tapped into this area, into higher time frame area of interest. On the 1 minute, what do you want to wait for? You want to wait for inducement to be, chalk to be taken, because when price taps into a higher time frame area of interest, your first internal structure low in the case of this now is your chalk. So now, chalk is marked out. Once chalk is taken out, do you actually need inducement? Well, take a look at how price printed this high and pulled back. Now it went back, when price went back higher to take out that high, look at it. It took out this high with a candle closure. So you need inducement after taking out chalk. And so let's continue to advance price and see. So now chalk has been taken out and you need inducement. So we need to wait for inducement to take place there. Now, once inducement has taken place there, where is your area of interest? Well, your area of interest will be this. If inducement is taken, this candle here will become your area of interest in future. If price taps into it, I'm talking about in the event of taking out inducement, because you need inducement. So let's continue. Okay, so as you can see now, here is your inducement in the market to confirm this low. So let's continue to play price. Okay, it didn't take out that inducement before printing this new low. So our inducement can be transferred from here. Our inducement can be transferred from there to this point. Can you see that? Now, we are waiting for inducement to be taken. Once inducement is taken, then this area of interest here is valid for us to go long, to go short. Okay, so we can actually place our pending order to go short from here. Remember, this is the 1M, so we can go short from here. Just give a buffer to your stop loss, and then you can target 1 to 2. Why? Because there is still this higher time frame refined area of interest above here. So this zone is not a high probability zone. Okay, so I will advise that you do 1 to 2 here. So that's your 1 to 2. Now let's play price. As you can see, inducement has been taken, and okay, we have been activated into the market now, as you can see. So let's see what happens. Okay, so as you can see, our TP has been smashed. Okay, that's the second sniper entry. Now if you look at the stop loss here, let's look at the stop loss here so you know what I mean, that this is a sniper entry. So you have 1.73 pips stop loss, which is great. Okay, so we continue. Now we have achieved 2 TPs now using sniper entry. Now as you can see, like I told you, this area of interest is still above here. So this one was a low probability area of interest, but this is high probability area of interest. Why? It is because if price takes out this area of interest, then it is very clear that price wants to continue to go higher. Remember, we are on the 1M now, so we want to wait for price to come into this refined area of interest and see what will happen there. But if price continues to come down, all right, then you can begin to trail your stops. You can begin to trail your stops. What's wrong about that? Once it closes below this low, you can actually trail your stops. As you can see, it didn't close below the low. Okay, so let's continue. Okay, so price has come into this refined area of interest now. Now, where is your chalk? Your chalk is the first internal structure low in this case. And so where is your first internal structure low? It is this one. And price has taken it out, but with a candle wick, we need a closure, a candle closure. Once we have a candle closure here to confirm our chalk, then we can take our trade from there. This is change of character. So let's wait for it to happen. So as you can see, price has clearly, has it closed? Yes, price has closed below this chalk. And therefore, where is our area of interest? Our high probability area of interest is this one here, guys. Let's see. This is your order flow. Order flow is more important. But if you want to refine this order flow, then you will use an OB. But here, if you use an OB, you need a fair value gap with an OB. But there is no fair value gap here. So we leave it this way. Let's see. How many pips is this our stop? How many pips is our stop loss? Oh, great. 1.20 pips, which is great. This is how to take sniper entries in the market, guys. So let's see. Let's frame this straight to go short from here and see how it plays out. Just give a buffer to your stop loss, and then where do you target? Well, the first point you target is this. This will be your first target. This low here is your first target. Once price takes out this low and closes below it, you can move your stop loss to break even. And then this is the second point, where you can also move your stop loss to break even. But I want to see, let's get back to the 15M and let me see our ultimate target. This will be our ultimate target, guys, here. So let's play price from here. So this is your first TP. Once price closes below this low, you move your stop loss to break even. It closes below this one again, move your stop loss to break even. Trail your stop loss if you so desire, but this is too close. Once it closes below this low, move your stop loss to break even and let it run till this ultimate target here. So this becomes our ultimate target. Simple. So let's continue to play price. Let's do it on the 15M to make it a bit faster. Okay, so unfortunately price did not get to this our zone here before going back higher, but take a look at what we could have gotten if you trail your stops. This is what you would have gotten, guys. You would have made a decent 5R, over 5R. Okay, So this is the exact way of taking sniper entries in the market, and you catch every move. Please go over this video if you actually want to be a master of this. This is a complete trading plan for both the beginner trader and the advanced traders who are still struggling with the market. Thanks for watching.